Hey, what is up, stock compounders? All right, we got Jose already active in the chat. 4 of you here. Very awesome to have all of you here today. So Jose just gets right into it, okay? This is something that's been on my mind. Jose from Switzerland, what is up, Jose? So Iggy Foundation, right? The foundation that was set up by Nick Sleep shows only 3 stock holdings and no Asos. Where did you get the info that Sleep owns Asos? So I'm just going to look up real quick in ticker. Sorry, you guys can't see my screen, but just imagine what it might look like. Iggy Foundation in ticker. I'm going to track investing gurus. So this is from 13F filings, right? The 3 holdings owned by Iggy Foundation, Amazon, Costco, and Berkshire Hathaway. So there's no Asos in there, right? And of course, investments in the UK don't have to be disclosed in 13F filings, right? 13F filings pertain to US holdings. So how did I find out about Iggy owning Asos? There's a guy I follow on Twitter. He's an investor in the UK. I guess there's a service you can subscribe to in the UK that shows, what, professional investors own in the UK. I don't have access to that. So it's really just trusting him that this is accurate. I would really like to figure out how to see firsthand for myself what Iggy Foundation owns in the UK. But it seems to be the second largest holding for Iggy Foundation is Asos. All right. Again, I'm not going to share who clued me into that. And I haven't seen it firsthand. So it's really just word of mouth. But real quick, I'm just going to go to Asos in ticker and look at ownership to see, if there's any Iggy disclosed there, or even Nick Sleep directly. I'm sure he wouldn't have it in his own name, especially if it's within Iggy Foundation. But scrolling down, I don't see any Iggy Foundation. As an owner of Asos, Asos is really something I'd like to wrap my head around more fully, okay? We've seen Hamish Hodder just come out as having purchased Asos, which is like his first investment in 2 or 3 years. And clearly, it looks cheap, right? It looks cheap. If you go to Asos, you look at the valuation in ticker on an acquirer's multiple basis. I mean, it's the lowest it's been since the global financial crisis, since 2008. All right, Asos is the cheapest it's been on an enterprise value to earnings ratio. It's 13 right now. Okay, and it's never been that low since it was negative in the global financial crisis. So it's potentially very compelling. I think we're going to see more and more value investors putting out content about Asos. We saw Investing with Tom release a video not too long ago. It's not something I've really looked at because it's in fashion, and I'm not tuned into fashion at all. It is not in my circle of competence. There's one other thing. So I'm really interested to hear Terry Smith's perspective on Asos, right? Terry Smith, prolific growth investor in UK. I tried to search for if Terry Smith has ever talked about Asos before, going through past annual meetings for Fundsmith, and I couldn't find anything. It's a pretty small company for Terry Smith. It's possible that Smithson would be interested in owning something like Asos. I think it's only like a 2 billion market cap company. So, right on the edge of small cap, mid cap, which is even small for Smithson, honestly. If you look at the average company size in Smithson, I think it's like 10 billion or something like that. The smallest high conviction position in Smithson is Domino's out of the UK. So ticker DOM, not the DPZ that we have here in the US. So very small, even in relation to Smithson, which is the small and mid cap fund for Fundsmith. So I don't know. Hopefully we see something from Smithson or Fundsmith regarding Asos. Even just a discussion about it would be awesome. But very sleepy out there. I've searched Twitter, trying to find investors talking about Asos. There's not a lot there. There's not a lot of meat on the bone. There's a little bit in corner of Berkshire and Fairfax. But again, it's pretty light on, kind of deep dive into Asos. And I don't think, maybe there's something in Value Investors Club. Let me just look that up real quick. These are the kind of the go-to sources to get started on an investment thesis for me. Nothing in Value Investors Club. So pretty quiet out there in terms of Asos. Obviously, you can go through Nick Sleep's letters, Nomad Partnership letters, just search Asos. I think there's like 5 mentions of Asos in the entire duration of Nomad Investment Partnership. And there's not a lot of meat to sink your teeth into for that company. So hopefully more and more comes out about that. I noticed Hamish Hodder just put out a video 6 or 7 hours ago talking about, this big dip in Asos just since he bought a couple days ago. It's down like 17%. I think the CEO announced that he was leaving, which was obviously a big deal for a company, right? When a CEO leaves, that's like the captain of the ship. So I'm curious, probably after this live stream, I'll watch and see what Hamish has to say about, his reaction to the CEO leaving and that stock price decline. So that's on my radar. Just going through some of the comments. Good morning to all of you, or good evening, wherever you're tuning in from in the world. What do you think about Races? Engen, I don't know I'm probably butchering your name. I own Races in my Roth IRA, my retirement account. So I'm bullish on it. Monish Pabrai thinks it's worth 800 to 900 million. The current market cap is around 150 million. So that's potentially 6x from where it is now, just on what the assets are worth today. Okay, that's not factoring in any kind of growth going forward for Races. So, and Pabrai seems very bullish on the management team, right? It's this father-son team. They've had a strong track record of, growing the business over time, compounding the value of the business. And he doesn't see that slowing down anytime soon. So, you're able to buy in at a, maybe 15 cents on the dollar into something that's going to compound over hopefully decades. So again, that's Pabrai's thesis. Pabrai is much smarter than I am. So that's sort of a high level case for Races. Again, none of this is investing advice. Do your own work. But I am bullish on Races out of Turkey. Salil, hey Brad, great to see you again. What's your opinion about investing in small caps? Yeah, it's kind of a double-edged sword. On one hand, obviously, there's potentially a lot more growth if you're investing in small caps, right? It's rare for a company to get to a place where they have a 50 billion or higher market cap. All right, there's not that many companies that achieve kind of that level of size, 50 billion or higher. So, the way Pabrai looks at that is, if you're investing in these large caps, it's potentially like the odds are stacked against you for a company being a 10 bagger or a 100 bagger, right? It's very rare for companies to end up that large. So on a statistical basis like that, he wants to find companies kind of earlier on in the life cycle, right? Maybe 500 million market cap, or even less, right? Most of his emerging market companies investments are under $1 billion in market cap. Obviously, he's got the big ones like Micron and Alibaba, which are, I think Micron's around 75 billion. Alibaba is somewhere in the 400 billions. But he prefers to be on the small side, okay? And I think, a big part of that is, ride that long runway of this company that has the ability to compound for many, many years and not be inhibited by size. So, that's the upside of investing in small caps. If you pick the right one, or you pick the right ones, you can potentially ride a very long wave off into the sunset of compounding over many, many years. The challenge of investing in small caps is we don't have as much of a track record to go on because the business is smaller, right? And so we don't have as much to dig into in terms of history of management, what they've produced in terms of results. We may not be at a place where a company has clearly won in its industry, right? That's what Terry Smith likes to find. He says, I don't like to try to guess at which company are going to be winners. I like to pick the winners after they've already won. All right. So Terry Smith is okay getting into a company when it's already a little bit bigger, okay, where the returns, that runway isn't going to be as long potentially as something like getting in when it's a small cap or a micro cap. And that's the trade-off: more certainty, less return potential, less runway. So you've got to weigh that for yourself, right? And it's interesting to look at these great investors and just see, okay, where on that spectrum are these great investors? And it changes over time, right? Usually when an investor is earlier on in their career, they tend to focus on, those smaller opportunities. We saw that, I haven't studied this too much with Berkshire Hathaway, how the average market cap has changed over time in terms of new positions in Berkshire Hathaway's portfolio. But that would be interesting, actually, just thinking out loud here. But it seems like, as most investors progress, they start trying to find these kind of diamond in the rough opportunities, which largely exist in that small cap space because the big players just can't play there, right? It doesn't move the needle for the portfolio. So that's what really pays off, to roll up your sleeves and find, gems in the small and micro cap space. And over time, they can't play there anymore. So they play in the bigger and bigger companies arena. So, that's just sort of a high level take on small caps, potentially riskier, right? Because a lot of these small caps aren't going to end up in large cap world. They're going to die, right? They're going to go away. So potentially more goose eggs, more zeros in the small cap space, but also potentially higher payoff for the ones that you get right. I think Warren Buffett and Charlie Munger would say that if they were managing small sums, they would be investing in small caps. What are your thoughts? Yeah, that's probably true. And, again, I think the reason for that is there's less competition, right? There's more mispricings in the small and micro cap space because there's less, smart money there, just because there can't be as much, right? There's not as much room for big money in those opportunities. So I don't know that they would set out specifically to say, I'm only looking at small caps. But I think just by the nature of the inefficiencies in small cap versus large cap, they would turn up more opportunities there. I forgot to say good evening. There you go. Engin, where are you tuning in from? That it's evening for you. And everyone watching, we've got 30 people on here. Where are you tuning in from? Curious to hear where you guys are at. It's fun to see that. Sebastian, good evening from Germany. There you go. Sebastian from Germany. Awesome. Good to have you here, Sebastian. Salil, small caps equal micro caps equal roughly 50 million to 300 million in market cap. Yeah, so I think of micro caps as kind of less than 300 million in size, and then small caps 300 million to 2 billion. Mid cap 2 billion to 10 billion, and then above 10 billion, you've got large caps. 30% Monish, 10% Farad Mismar. Okay. I'm not sure what you mean, Engin, but that's intriguing. Jose, thanks a lot for your answers and time. Very much appreciated. Absolutely, Jose. Thanks for being here and contributing to the conversation. Retro Ranger, for the first time, managed to be in the live stream. Retro Ranger, you've been a long-time viewer. Awesome to have you here live. Let me know if you've got any questions, buddy. For the first, let's see, greetings from Germany. Glad the gunshot did no harm to you. Yeah, so... for those of you who aren't following me on Twitter or didn't see this on Twitter, on, was it Friday? Yes. Friday? No, it was Monday. So on Monday, I was driving through Oakland. I had just picked up some stuff at Home Depot, which, you know, for any of you who aren't familiar with Home Depot, this is an aside to my original story here about what happened on Monday. But if you look at the price chart for Home Depot, it's insane. Look in ticker terminal over the last, you know, just click all. And it is a beautiful exponential growth curve. Home Depot has been a fantastic investment and may still continue to be. So worth digging into for those of you who are looking for long-term compounders. So I was driving away from Home Depot. I'm at this four-way intersection. Okay. It's a rough area, right? It's kind of right under the freeway. There's cars kind of on either side, not going in the same direction as me, but adjacent to me. And I feel like I get to the intersection first, right? But you know, this car starts going from my right across. And I go probably earlier than I should have, just kind of letting him know, hey, I think I was here first. So, you know, I'm a little bit aggressive. I didn't give him as much space as I could have. And so I go through the intersection. Right after I go through the intersection, I hear this pop underneath my car. And it's like this wave that like moves through my body, right? It's like there's a little explosion. It feels like it's coming from underneath the car. So, you know, I was like, wow, what was that? I figured my tire popped or something, but it didn't. Like I wasn't having any trouble driving. So I kept going, didn't think too much of it. And, you know, I realized my back windshield is just like shattered, like it's spidered everywhere. It's still intact, but clearly there's been something that happened to my back windshield. And I look back and there's this little hole in the back windshield. I'm thinking, wow, somebody just shot a hole in my back windshield. Okay, that's the thought that goes through my head. So, you know, I go a little bit further, I pull over, and I'm trying to figure out what exactly happened here. So I'm trying to figure out, you know, are there any other kind of bullet entry points in my car where the bullet could have come through the back windshield and hit something else, right? Because I figure if somebody shot at the windshield, you know, the bullet must have gone through and struck something else, right? It wasn't lodged in the windshield. And I didn't see anything, okay? So I don't know for sure that somebody shot through my back windshield. But I posted this on Twitter, right? And somebody posted a link where I guess this can happen, where your windshield just like shatters unexplainably. And it has to do with tempered glass and how if you have any imperfection in your windshield, with tempered glass, over time it expands and contracts based on temperature. You know, it gets cold, it gets hot, the glass expands and contracts. And if there's an imperfection that causes weakness at that point in your windshield as it's expanding and contracting. And so it's possible I just hit a little bump and that triggered this kind of explosion of my windshield. And maybe the piece just fell out there where there was the weakness and that looked like a hole to me. I didn't know how else to explain it to myself in the moment other than, you know, my windshield got shot at. So I got this piece of information from Twitter. You know, it's possible. You know, I haven't found another kind of bullet point in the interior of my car. So maybe that's what happened. But, you know, I was shaken up, obviously thinking I had gotten shot at. And so, yeah, I'm fine. The bullet didn't hit me if it was a bullet. But the lesson there was, and I see this a lot. People easily get road rage, right? People get triggered when they're driving. Somebody cuts them off. I just saw it the other day. Somebody got cut off. They laid on their horn. The person in front decided, all right, screw this guy, right, who's laying on his horn. He decided to really slow down, like really mess with the guy. And I just see it so often where it's so easy to get triggered driving. You guys, it's not worth it, okay? If any of you have road rage, if you experience road rage, and I have it too, I've experienced it, it's not worth it, right? Because there's no upside to driving like that. There's no upside to getting pissed off at someone, kind of showing them, you know, I'm boss here, right? I'm going to mess with you. I'm going to flip you off. There's no upside. It's all ego, okay? And it's not worth a potential altercation, you know, running into someone who's having a really bad day, you know, maybe they've got a weapon in the car. Just move on. Just move on. So that was a good reminder to me to just chill out, assume, you know, this person's having a rough day. Whatever they did that I thought was wrong to me, just let it go. But anyway, that was a big digression there with what happened. But there is an important lesson in there, and it relates to the stock market, right? It's like, don't let your emotion take the wheel. With investing, right? If the market's crashing, it's easy to, you know, let fear take over, right? Market's going up and up and up. It's easy to let greed take over and just plow everything into the market, right? Mortgage your house, pull that money out, throw it into the market. Fear and greed, there's just no place for those things in the portfolio. Let's see, what else we got? Engin, I don't know how to say it, from Turkey. Awesome from Turkey. There's a guy I came across recently in Turkey through MOI Global. I'm going to butcher his name, Mesut. I think it's Mesut Ilio, I forget, Ilial Tioglu, something like that. I guess he's one of the best investors in Turkey. So Engin, I'm curious if you've heard of him. He runs a fund actually with Matt Peterson. Okay, they combined to formulate this entity. It's called Talas Capital, and I think it's a pretty high concentration value portfolio based in Turkey. So could be worth looking into. Engin. Paul, Bend, Oregon. All right, Paul, just up the coast from me here in the San Francisco Bay Area. Good to have you, Paul. And Paul, I believe you were my first super chat, Paul. So, you know, you'll always have a place in my heart, buddy. Bend, Oregon. I was just in Oregon last month for a men's retreat. So, you know, beautiful country up there. Definitely fire country. It's really sad what's happening in California and Oregon with the wildfires recently, but hope you're safe up there, Paul, and not breathing in smoke as we speak. Rito from Switzerland. Good to have you, buddy. Headphone James, good morning from Northern California. So Headphone James, good friend of mine. really with me from the beginning of the channel. Okay, gave me a lot of encouragement early on. So really appreciate you, buddy. Retro Ranger, currently wrapping around Asos. Yeah, you and me. The acquirer's multiple is the lowest ever, at least since 2008, when it was negative. And check the punch card Discord. Math suggests that Asos has a supply chain moat, and all the noise seems to be an event. Yeah, you know, the CEO leaving could be more than noise. I'm curious what your thoughts are on that, Retro Ranger. But yeah, for those of you who don't know, punch card investing, you know, I do every Friday live with 4 other great value investing YouTubers. So check that out. We also have a Discord where we kind of continue the conversation beyond just what we can cover in the punch card live stream. So check out that Discord. It's open to everyone. And I guess there's a discussion around Asos happening in that Discord. So I need to be more active in that as well. I didn't even know there was a conversation happening about Asos. So thanks for letting me know, Retro Ranger. I want to stick to my cloning. Need that guru. Yeah. I mean, there is a guru in Asos, right? Iggy Foundation. I guess Case Zakaria, who also was highlighted in Richer, Wiser, Happier, also has a position in Asos. I know he was originally in Boohoo, as opposed to Nick Sleep, who had a position in Asos. But it sounds like Case has also come over to the Asos side. So again, still want to try to figure out how can I see what these great investors in the UK own, kind of move beyond what I can find on ticker and just find through 13F filings. So if any of you have tips on that, let me know in the comments or the live chat, how to do that cloning over there across the pond in the UK. Sebastian had mentioned on Twitter some while ago, but may have missed it. Have you ever looked into Games Workshop Group PLC from the UK? I have not looked into Games Workshop Group. I know it's come up, maybe on Twitter. I don't remember where I've seen it. But Games Workshop Group, you know, there's a relatively recent write-up on Value Investors Club from Games Workshop. It's from about 2 years ago on Value Investors Club. So that might be worth looking into. Market leader for tabletop miniature gaming and related products such as board games, books, and card games. So kind of old school games, right? Not this digital gaming that we're really seeing take off. Yeah, so it could be worth looking at. Again, check out that VIC write-up from Games Workshop out of UK. Again, I haven't looked at it. Amin, good evening from Norway. Awesome. Good to have you here, Amin. I spent a little time in Norway, maybe like 8 years ago. I went to Bergen, which is a cool little fishing town, but I didn't spend too much time in Norway. Very cold. I don't think I'd want to live there. There's just not enough sunlight to really keep me happy was my impression. Very blustery winds. But, you know, potentially a cool place to check out. I'd definitely be up for a visit. I remember there was a story that really impacted me. So I was on a tour going through one of the fjords. And, you know, in this fjord, there was this story about how, you know, there was a wedding party, you know, many years ago. And this big storm came in, right? So this wedding party that's on this boat, and you know they were really concerned. Like the swell was really intense, and at one point they managed to put the bride on this ledge that was on the cliff, right in the fjord. They managed to get the bride on there. I don't know how they did that, but you know they were able to put her there, and then the ship, you know, capsized, right, and everyone on the ship perished. So you've got this bride in the middle of this crazy storm in this fjord, just sitting here on a ledge, right? Seeing, you know, her groom and everyone else in the wedding party just perish in this storm. And she's sitting there in the cold, wet. And, later she gets rescued. Quite a story. I don't know if it's true or not, but pretty intense experience if it actually happened. Retro Ranger, I can't imagine you being that angry. I don't remember talking about being angry, but I don't know, maybe I've mastered my emotions and I've already moved on from that. Anthony, I hate commuting and all of the drivers in Cleveland. I've tried to learn, to not let it get to me. I see. Yeah, talking about road rage. Yeah, it's weird. It's just this thing that kind of comes on out of nowhere. And I think it really comes from this place of wanting to feel like I'm in control, right? Which comes from insecurity, and I don't know. It's very primal. It's very deep and primal. And it's something, I hope to gain more and more control of as I get into meditation, as I really get in tune with what matters, right? What's important here, rather than letting the primal, maybe it's the amygdala, just like take control without any rational input. So it happens, right? It happens less and less for me. But yeah, it's very, very primal. I hate commuting. Yeah, commuting sucks. Being in traffic, I hate being in traffic. One of the things that's beautiful about having this YouTube channel, hopefully, over time, it becomes a very robust business, right? And it allows me to work from anywhere. I don't have to be anywhere at any time, right? It allows me that freedom of time and location that I think, anyone who's really striving for financial freedom, I mean, that's a big part of what makes that so attractive, is being able to decide where and when I want to be and what I'm doing. So hopefully you guys can get out of that rat race sooner than later. It's not a comfortable place to be in. But yeah, it doesn't happen right away, right? It takes a commitment to, just hitting the pavement and, having that compounding mindset, right? Taking one step after another, small changes, day after day, year after year, really, really become something. And it's tough. But if you find what you're excited to do every day, and you're able to tap in to this permissionless leverage, right, that code allows us to tap into, right? These servers working 24/7 for us, creating content on YouTube, Twitter, tapping into these social platforms, podcasting, right? If you're able to do that for years and years, if you find something you're passionate to talk about for that long, magic can happen, right? When it comes to compounding, there's a lot of different ways to do that. So I would encourage you guys, if you're in a 9-to-5 that doesn't excite you, tired of commuting, really come up with a plan to shifting that. Okay, figuring out where are the leverage points that I can really tap into and provide value for others, and just go for it. Right, commit to something small. I committed to like 3 months of making a video every day, and it's been off to the races ever since. So it doesn't need to be video, right? It was really hard for me when I was starting to sit in front of a video and put out my thoughts into the world, right? That was very uncomfortable for me. But it gets less uncomfortable, right? Each time you do it. And if it's not video, maybe it's podcasting, maybe it's just putting out content on Twitter, right? You've got a gift for the written word. There's so many ways to scale your influence and your voice. So if you have any inkling of getting involved in any of those things, I would highly recommend just commit to something and see it through. Mirek, good morning from Sweet Home, Chicago. My wife is from Chicago. I know we got Jack Duffley from Punch Card from Chicago. I think Sam Zell is his home base is in Chicago, the Grave Dancer. So there's a lot of great folks in my life from Chicago. So cheers. Good morning, Marek from Chicago. Ford looks good on a free cash flow point. Yeah, I got to say, I would never invest in Ford. The debt is just, I haven't looked at it recently. I know Investing with Tom did sort of a DCF valuation of Ford way back when, along with Apple. And, if you look at how much debt Ford has compared to the equity, if anything goes wrong for Ford, it would be very easy for the debt to be a huge problem. Okay. And when the debt becomes a huge problem, the easiest way to solve that problem is to declare bankruptcy. Okay. You wipe out the equity holders and you kind of start over, right? I would imagine there's very low insider ownership for Ford. Okay. Because management understands that. They're secure with their, paychecks, right? From week to week, month to month. But they understand, right? There's that downside risk for the equity holders, that big risk. And so I have no interest in Ford. Maybe it's compelling from a free cash flow perspective now, but that is a big risk when it comes to Ford and most other automakers, frankly. So I have no interest in Ford. 75% racist belong owner Monish Mismar. Okay. So, there's a big ownership stake from Mismar. I don't know who Mismar is. But yeah, large controlling interest from a few big players. It seems some operation is coming. Enrique, have you jumped into Asos yet? No, but I'm more and more intrigued by the day around Asos. I'm really trying to figure out, all right, who are the high level great investors who are talking about, what they're seeing in Asos. Again, I think it's still too small for Terry Smith to really give it much attention. I've been told, from people who follow Terry Smith, the margins are probably too low at Asos for him to be interested. But again, Smithson, the small and mid cap fund out of Fundsmith, may have a little bit more wiggle room around margins, may be able to look at things like scaled economies shared, right? And decide, okay, we don't need to be so rigid on our margin requirements, given, these other great long-term attributes of the business. So haven't jumped in. I am wanting to absorb as much information as I can about Asos. So if any of you have seen really thoughtful write-ups around Asos, hit me up on Twitter or let me know in the comments here. Bjorn, hi from Sweden. Bjorn, great to have you. It's nice to see we've got some Scandinavian presence here. I have a lot of Finnish ancestry in my blood, actually. My grandmother on my dad's side came over from Finland. Okay, so I'm a quarter Finnish. It's kind of the largest percentage of ancestry that's in my DNA, Finland. So really resonate with you Scandinavians. And, of course, having Finnish blood, I love saunas. Okay, saunas, hot tubs. I am drawn to those like moth to a flame. Paul, yeah, I'm looking at Asheville too due to smoke. Yeah, awesome, Paul. So, there's a lot of people moving out of California to places like Texas, to places like Salt Lake City area in Utah, Denver, Colorado. It also seems like there's a lot of people moving to Asheville, North Carolina. So, awesome. Yeah, let me know what you find, Paul. I'm still developing my thesis around Asheville and, what it's going to be like to live there, if it'll feel like home to me, based on what my values are and what I want to experience in terms of home. So I'm curious, Paul, what you've found, what your kind of elevator pitch is for Asheville. Curious to hear from you about that. But yeah, the smoke is tough. It's feeling less and less like a habitable environment here in California, which is really sad. This is really the place in my life that is most like home out of any place I've lived. So sad to see it shifting in such a challenging way recently. It's hard to see it getting better, right? With what's happening, lack of forest management, really. And it's hard when you build in forest that's supposed to burn every so often, and you have to suppress fires, right? Because people's lives are at stake, people's homes, people's livelihoods are at stake. Something's got to give there, right? That's not a sustainable situation. It's not good design, right? It's poor design. It's lack of understanding of how the environment works here, which is just too bad. Retro Ranger, but CEO for a fashion supplier seems to not be that important. He was no founder. Okay, so I don't know much about Nick. I think it's Nick Baton, who recently left. I guess he wasn't the founder of Asos. So that's too bad. I really like to invest in founder-led companies. Okay, some of the great companies of our time have been founder-led companies. You've got Facebook, you've got Amazon, you've got Constellation Software. I mean, you go down the list of great long-term compounders. Many of them have been founder-led. So that's not the case with Asos, it seems. But yeah, from my perspective, even though he wasn't the founder, still CEO change is a big deal. Okay, and I don't think they've announced the new CEO yet, but I probably need to be pretty comfortable with the new CEO before I take a bite out of Asos personally. Another Amin from the Netherlands here. What is up, Amin from the Netherlands? We got a Netherlands Holland presence here, which is awesome. Mirko, also Netherlands, perhaps. Some Retro Ranger. What's the name of the guru again in Asos? Didn't catch. Sorry. Nick Sleep. Okay. I would highly recommend for any of you who haven't read Richer, Wiser, Happier, it is the book of the year. Okay. It is probably the book, I'm sure it's the book that people like Guy Spear, Monish Pabrai, big investors that send books every year, right? Like that's what they do to thank their community. They send books. This is the book that they're going to be sending. Okay. They have been sending Richer, Wiser, Happier. So definitely read that one. One of the chapters, I think it's chapter 6, is Nick and Zach's excellent adventure. And it's really just about Nomad Investment Partnership out of the UK, led by Nick Sleep and Case Zakaria. And this journey that they had of starting with looking for 20-cent dollar bills in places like Zimbabwe. Zimbabwe cement was one of their earlier bets. Kind of transitioning to trying to find what are the few great long-term compounders, right? And one business model they came across that really fit that was this scaled economies shared model, okay? Where as the business gets bigger and bigger, because it gets bigger, it's able to cut costs through scaling, through these scaled economies, and it passes on those savings to the customer, right? As it grows. So it keeps very little for itself. Most of those savings get passed on to the customer. And, well-known businesses that really fit this model, Amazon, Costco, Berkshire Hathaway, these are some of the great, incredible businesses of our time. And it seems, Nick Sleep was solely focused on these scaled economies shared business models for Nomad towards the end of Nomad Partnership. And now for Iggy Foundation, which is the charitable endeavor that Nick Sleep really poured his energy into after, becoming financially free from Nomad Investment Partnership. That box was checked off. He's moved on from becoming a fund manager. Now he's focused on this charitable efforts. So one would presume that Asos fits this model, right? Because that's kind of what Nick Sleep seemed to be solely focused on from an investment perspective. And a big note as well, Amazon, I think it was in 2019 maybe, grew to be just too much of Nick Sleep's personal wealth, right? It was like 70% of Nick Sleep's net worth was in this one company, Amazon. And that started to make Nick Sleep a little bit uncomfortable, right? It was just too much concentration, even for Nick Sleep. So he cut half of his position in Amazon, put the other half into Asos, all right, in 2019 or 2020, somewhere in there. So that's, I think, why a lot of people are interested in Asos now, because they read Richer, Wiser, Happier, saw that Nick Sleep has a pretty sizable position in Asos. And if it performs anything like Amazon or Costco, could be a great long-term bet, right? It's still small. It's just around $2 billion in market cap. So it could have a very long runway and a very robust moat and defensible business model. So that's really what I'm trying to parse apart now, try to figure out, all right, what is that moat? And why is it such a great business? So again, Retro Ranger, that's kind of a long answer to your question. What's the name of the guru involved in Asos? We got Nick Sleep and Case Zakaria from Nomad Investment Partners. Bjorn, have you noticed the higher inflation in the USA? Do you think there could be stagflation? So I haven't personally noticed rising inflation from the things that I normally spend money on. But obviously Buffett has been pointing to this in recent letters, that he's seeing inflation, at least in a lot of the companies that he's invested in. There's that pressure to increase prices. So it's not something that I've really noticed. And it's not something that I really pay attention to in my portfolio. It's something that people really like to talk about. To me, it's more one of those macro theses that I don't feel like I have a particular ability to forecast better than anyone else and gain an edge in my portfolio, looking at, what the inflation picture is moving forward. So it's just not a space I play in. We're coming up on 47 minutes, guys. I'm going to keep going through the live chat. But if you have a question you really want me to tackle, hit up that super chat, okay? It's that $sign down at the bottom. It'll highlight your chat, bring it to the top, and I will tackle that right away when those come through. And it's a way to kind of a new way to support the channel. So much appreciated for any of you who send a super chat. Hey, man, AC, as much as I love my international community here, I feel bad. It's so easy for me to butcher these names from outside of the US. So hopefully you guys cut me some slack with that. AC from Israel, big fan. What's your thought on current Micron price? Thanks, man. Appreciate it. So let me just see exactly where Micron is now. Last I checked, it was like 70 to 75, somewhere in there. Whew. So Micron is at 66. I like it. I like it at 66. I think there's good things in store for Micron over the next 2 or 3 years. We got big buybacks coming. I see free cash flow growing at Micron. There's just a lot of tailwinds in the industry, right? And I think the industry has gotten smarter as the number of players has dwindled down to 3 big players in DRAM. You got Samsung, Hynix, and you've got Micron. Okay. So because of that, there's, in terms of supply, there's just a lot more rational behavior with these 3 companies as it relates to production and supply of memory chips. And you've got this increasing demand. Okay. So when you've got rational supply, increasing demand, that's a compelling situation for a company like Micron. So I really like Micron. I don't have any plans to sell. I think over the next couple of years, it's going to be worth 200, maybe 250, somewhere in there. Right now, we're at 66. So 3 or 4 years, I should say. 3 or 4 years, I think it's a 3-bagger, conservatively. Again, none of this is investment advice. Do your own research. But if I didn't own Micron already, if it wasn't the biggest position in my portfolio, I would seriously consider buying Micron at this price point. And if you look at Dataroma, you search Micron, you look at who's involved in Micron, who owns it from a super investor perspective. It's a beautiful picture, guys. There's 10 investors that are tracked by Dataroma who own Micron. Lilu, it's his largest U.S. holding. Lilu. I mean, there's really no one I respect as an investor more than Lilu. Okay. Monish Pabrai, it's the largest position in his portfolio. He thinks it's just getting started. Okay. Very recently, he said that. Again, biases, right? It's the largest position in his portfolio. Even though he's a great investor, we're all biased, especially when something is such a big chunk of our portfolio. So take all of this with a grain of salt. David Tepper, great investor, Appaloosa Management. Let's see, it's the largest position in David Tepper's portfolio. Okay, so Lilu, Monish Pabrai, David Tepper, Guy Spear owns it. Sequoia added 54% recently at a price higher than it is now, right? The price is lower now than it was at any point in the second quarter, okay? So a lot of strong bullish sentiment from super investor activity recently in Micron. And that's really top of funnel for me, right? In order to really dive into a new investment idea, this is what I look for from great investors, these kinds of signals that we're getting from Micron. So could be a really interesting opportunity at this price point. Again, not investment advice, but I like it. Let's see, Anthony, working toward that financial freedom. Yeah, man, me too. It's hard, right? There's nothing easy about achieving financial freedom. The biggest tip I would have about that is, make sure you enjoy the process, okay? Because it's not just about getting to financial freedom. Because often what happens, you'll hear from wealthy people talk about this, right? Once you get there, you think it's going to be this incredible moment, right? I've finally gotten here. I've achieved financial freedom. But at the end of the day, having money, right? Having financial freedom, it's going to solve all your money problems, right? Money solves your money problems, but it's not going to solve the rest of your problems, right? And if you really look at your life and you list everything that you struggle with, probably not more than 1/3 of that stuff is going to be money related, okay? So be cautious, be wary about thinking, achieving financial freedom is going to, make everything perfect in your life, because it's just not, okay? So, that may sound like kind of a downer, but it's really not. I think it's liberating to realize the earlier you realize that, the more it can set you free. And the big lesson there for me is enjoy the journey, enjoy the process. Figure out, how can I kind of carve my path to financial freedom in a way that I want to get up in the morning and do it, okay? For me, it's talking about investing. It's talking about how to become a better, intelligent investor over time. How can I take those small steps, become better and better every day, and share it with you guys and learn from you guys, okay? That's exciting to me. And anyone can do that around any topic in this day and age, which is incredible, right? It's an incredible time to be alive. So that's how I would think about financial freedom, right? We all want it, but enjoy the process. It's not going to be this thing that completely liberates us and delivers us to enlightenment, right? It's just another step on the path of our lives. So Anthony, I'm with you, working towards it. Make sure you enjoy the process. Ford is dead in the water in Thailand's markets. Okay, that's cool. Thanks for chiming in, NNK. It's interesting to know how these businesses are faring in different economies around the world. Ford, seems like it's struggling in Thailand. An interesting point there. Jack, Brad, there is a very intriguing company trading near book value and under 10 PE. Look up SBS Sabesp. I don't know how that's pronounced, but I would love to see your initial thoughts. Yeah, what would be interesting, guys? I think I might do one of these start doing one of these live streams where you guys just throw out ideas and I kind of take an initial temperature of what I think of the company. I think maybe that's what Frank is doing. He's doing something called Ticker Time, which is a live stream where they do kind of an initial, maybe 5-second hit on a new investment idea. I think that's something Andrew Kuhn has been doing for a while with his podcast. What is his called? Something compounding capital. I don't remember exactly. You can look up Andrew Kuhn on Twitter. Has a big following. He also runs a fund by the same name, I think, as his podcast. But it's an intriguing model. Okay, so I think I might do that. So keep these ideas in your pockets, guys. I think I'm gonna launch some kind of a time every week where we can dive into those. So appreciate that. It clearly seems like there's interest in that. So thanks, Jack. Mirko, would you invest in oil companies? Have invested in oil about a year ago when depressed. Seemed like a good time to get in, but I have no ESG remorse. Do you keep ESG in mind when investing? So ESG, I don't particularly love the term. I think there's a lot of baggage that kind of gets lumped in with ESG. One of the small funds that I follow is Massif Capital, MASSIF. They consider themselves, a sustainably oriented fund, but it's not in the way that a lot of people think about sustainability and ESG. They are perfectly happy to own an oil company that's kind of helping with the transition from an oil economy to a renewable energy economy. Okay. It's easier for people to give oil companies a black mark, right? Just because they're an oil company. But Massif likes to take a deeper look at the company. Okay. Rather than just disregard them because they're an oil company, looking at, all right, what is this company doing to transition the energy economy? Okay. And I think that's a much more thoughtful way to approach ESG than just looking on the surface. Oh, is a company in any one of these industries? Okay, we're automatically going to discard them. So I wouldn't necessarily exclude all oil companies from consideration, but I've never really looked at oil companies. It's not in my circle of competence. It's not an industry I'm particularly interested in, which precludes me from spending the time, the curiosity, the effort to get myself up to speed in that industry. So I just haven't played there. But it seems like Sven Karlin has done some work in oil and kind of natural resources plays. So check him out. I know there's that private research platform that Sven puts on. I think it's like $450 a year. I'm not a member of that. I'm not endorsing it. I'm just saying that's an option for those of you who want to go deeper in that space. That just came to mind. Yeah, so that's my take on that one. Jack, water management in Brazil, quite a significant moat as they are contracted to work for 25 plus years. That's great. Yeah, I like that, secure kind of recurring revenue of those long-term contracts. But water is something I'm more and more interested in. I think, Michael Burry was into water, probably a decade ago when he saw, this is an industry that is going to be facing pressure, right? At least a resource that's going to be facing pressure. Water shortages, water surpluses, as the climate destabilizes, there's going to be water issues, right? So there's another play in Colorado called Pure Cycle, I believe is what it's called. It was featured in Value Line in the Special Situations report, I think from September, as a new kind of suggestion for special situations. So it's something I should probably, I'm curious to sink my teeth more into, is these kind of water plays. Something also kind of irks me about privatizing water. I have some ethical issues around that come up. It seems like, from my perspective, water should be a right for every human being to have access to water. So privatizing it just kind of rubs me the wrong way. But here you go, water management in Brazil. Again, keep that in your pocket, Jack. Hopefully we can dive into that when I do one of these, pitch me your ideas and I'll take an initial look at them. Wonderland, awesome name. Norwegian living in sunny Spain. Okay. Yes, Norway is too cold and much too rain. Agreed. I'm much more inclined to live in Spain than in Norway. Spent a little bit of time in Spain a couple of years back. I did the Camino, right? The walk. We started in France, and I didn't do all of the Camino, but it was a pretty cool experience staying in albergues. The food in Spain in the albergues left something to be desired. I think breakfast was like bread and coffee, bread with butter and coffee, which, even though I was walking like 10, 12 miles a day, I'm pretty sure I put on weight because the food is so carb heavy. So that left something to be desired, but it was cool to be a part of this thing, right? Of walking across, the Camino, walking across Spain with a group of people, kind of learning about the history, seeing a lot of the architecture in Spain. And it's interesting to see how many homes in Spain were abandoned, right? These beautiful stone architecture homes. It seems like a lot of people have just left, right? A lot of just wasteland in Spain, which beautiful country. So it was kind of sad to see that. Asos equals Nick sleep. Yes, most people associate Asos with Nick sleep. Mirko, big chance in Tiva, in my humble opinion. So again, Tiva, keep that in your pocket, Mirko. I'll take a look at that when we do one of these sort of quick pitch stock. I don't know what I'm going to call it yet, but keep an eye out for it. The next live stream, maybe I'll put something like that together, and hopefully I can have someone else on with me, like investing with Frank or investing with Tom, one of the punch card guys. It'd be fun to do that in collaboration. Woody, good morning, Brad. Have you looked into home builders recently? Above average quality companies with some of the cheapest valuations in the S&P 500. Yeah, my impression of home builders is that it's a very cyclical industry, right? It's not something you buy and hold for decades. It's more of a timing thing. And that doesn't really appeal to me. It doesn't suit my temperament, okay? I really want to be in companies where I can buy in, I can learn more and more about the company, and I can, treat it like an owner, where I'm owning it for decades. And home builders just don't really seem to fit into that framework for me. I'm sure there's opportunity. There's opportunity everywhere, right? Just doesn't seem to quite suit what I'm trying to do. Greetings from Denmark. Great to have you here from Denmark. Another Scandinavian. Love it. Jack, how would you invest in Asos showing ASOMF showing little to no volume? The way I would do it is I would probably just invest directly in ASC from the London Exchange. I would just go direct through the London Exchange rather than going over the counter in the US. And I'm pretty sure I could do that through Fidelity, through the international trade desk there. Interactive brokers, I'm sure the same thing. I think it's fairly easy to access the London market from a lot of US-based brokerages. So hopefully wherever you are, you can access London as well. Seems to be a pretty accessible market from all over the world. Brad, I can only super chat if I know the capital will be used to buy more BABA. Yeah, that's fair. I can't guarantee that, Jack, but it's a fair stipulation. I appreciate that. Daniel, how important is the willingness to be lonely? Yeah, that's an interesting question. It kind of, it speaks to, as value investors, often we're swimming against the herd, right? Or moving against the herd, right? There's the pack of lemmings. They're all partying, right? They're having a good time, all kind of in unison. And then you've got the contrarian value investor who realizes, all right, if most people are doing one thing, it's probably worth challenging whether or not the foundation that's getting people to all do that one thing, is right, is accurate, is rationally based. But at the same time, with platforms like Twitter, YouTube, it's pretty easy to find people who think similarly, right? Who are also value investors willing to move against the herd. So in some ways, it's easier than ever to find your own little herd who's moving against the greater herd. So, I don't think we need to be lonely. I think we can find people who have that similar view of the markets and contrarian nature in investing. So I think it's less and less important, that willingness to be lonely. But I think we must always maintain that willingness, that curiosity, that drive to question everything, right? From first principles, to really strive to get at the truth of the situation, okay? Rather than wanting that external validation for how we're thinking, okay? That external validation is not helpful in investing. So even within our small group that's moving against the greater herd, it's valuable to always challenge what we think is true. And the more we get in an echo chamber of people who think like us, the more dangerous that is. I think it's always important to seek out very smart people who have the opposite viewpoints as we do. Okay, this is something that Ray Dalio talks a lot about in Principles and in his talks. I want to find the smartest person in the room who thinks the opposite of what I think about any given situation, and have a constructive conversation about who's right and why. So yeah, that's what I'll say, Daniel. Siva Kumar, Monish has averaged 12% CAGR over the last 20 years. Not sure if this is before or after tax. So I think I mentioned this, I answered this one before, Siva Kumar, but maybe you had ducked out of the live stream at this point. Do you think it's worth cloning for a 3% difference? Absolutely. Yeah, I was trying to work this out. I'm not going to be able to right here, but I encourage you guys to do this, okay? So pull up your compound growth calculator. Okay, just search for it online, compound growth calculator. And I'm going to do this as well. Compound, or call it a compound interest calculator. So the one I use is MoneyChimp. Okay, so pull out your MoneyChimp, put $1,000 in as current principal. We're not going to add anything. Actually, we will. Let's add $1,000 a year. Years to grow. Let's say you're starting early. You're like 25 years old. Okay, and you've got a 50-year runway. Okay, you can leave this capital compounding for 50 years. You're 25. You don't need to touch the money until you're 75. I know that's going to sound like a lot to many of you, but it's really going to drive home the point of how important a 3% difference is. So $1,000 a year, 50 years, at a 9% interest rate. Okay, calculate. So you've got almost $1 million after 50 years at $1,000 a year at 9% compounded interest rate. So almost $1 million. If we change that to 12, 3 million. Okay, just shy of 3 million. So a difference in 3% over 50 years is the difference between having $1 million and having $3 million. Okay, so a 3x difference in this case. So yeah, it's worth that extra 3%, I think, to do a little bit more work. Now, when I addressed this in the last live stream, obviously there's a lot more to cloning than there is to just averaging, dollar cost averaging into the S&P 500. All right, there's more thought that has to be put into it. There's potentially going to be more volatility, right, in your portfolio. So it's not a simple exercise to do this cloning and to get a 3% outperformance. But if you look at the numbers, right, the results are very compelling to get that outperformance. Siva is from Australia. It's 1 a.m. Wow. That is hardcore. Okay. That is dedication. Thank you for being here, Siva Kumar. 1 a.m. in Australia. Akshay, Ford has left India. Interesting. Okay. Ford no longer. I wonder if that was Ford's own decision, like if that was, or if Ford was kind of pushed out of India. I have no idea. Curious, Akshay, if you have any thoughts on that, or if you've done any digging. That's interesting. A few more here, guys. Again, if you want to jump to the top, hit up the super chat. Movies in motion. Retracted my statement because you already answered it. Thanks. Awesome. Cool. Let's see. Misery. Hi from Bulgaria. Are you keep working on Asos, or are you still completely uninterested in fashion? I am relenting a bit. Not to say I still don't think I'm going to invest in Asos. At least I don't think it's going to be a big position in my portfolio. But I think, seeing that Nick Sleep is very bullish on the company, and knowing, what great bets he's made in the past, I think there's potentially a lot to learn in terms of understanding the business model of Asos, and perhaps being able to identify other great businesses early on in that compounding runway. So I am willing to put some energy into Asos. So again, if any of you have done work on Asos, if you've come across any great write-ups that have influenced you, or just seem like high quality theses on Asos, let me know. Hit me up on Twitter DM, or let me know in the comments. Also, if you try to put a link in the comments, it may not allow you to. It's Google trying to cut back on spam and all of that. But you guys can always hit me up on Twitter. Okay, that would be much appreciated. If you have any quality leads on Asos. Dennis the Menace, any plan for entering into the Indian market? Yeah, so I just put out a video on Fidelity and how to invest in some of these emerging markets. I am not able to access India through my Fidelity brokerage account. I haven't figured out how to do it through Interactive Brokers. I think as a US resident, it's quite difficult, at least from what I've understood, to access the Indian market. So unfortunately, I don't have any plans for getting into the Indian market. I'm sure I could figure it out with enough will, with enough desire. But, there's a lot of other markets that I can access emerging, like Turkey, like Japan, like what else am I looking at? China, right? Japan, China, Turkey. So there's already a lot to explore there. So I don't have any huge push to really motivate me to figure out, all right, how do I crack this nut of investing in India? So no plans at the moment. Daniel, what percent cash are you? Right now, I think I'm somewhere around 10% cash. Okay. So, historically relatively low in terms of percent cash. Yeah. And I'm very comfortable with 10% cash. And again, it's not like I look at my cash position and think, all right, given where the market is, given where valuations are, I really want to be at this position in terms of percent cash in the portfolio. That's kind of a market timing thing that I don't like to do. So I'm at 10% cash. There's not a lot of thought that went, it just kind of where the chips fell in terms of as I find opportunities, I deploy the cash, and it's not a whole lot deeper than that. Aylin, hey Brad, love the content and how sincere you are. Thank you. Would you be interested in checking out the investors mentioned Richer, Wiser, Happier that are still running a fund and how they position themselves? Yeah, I am constantly on the lookout for new investors to bring in terms of cloning, right? In terms of really looking at the 13 Fs. But I have a lot of investors on that list. If you guys, I think it's a pinned tweet right now. If you go to my Twitter @bkellner, that list is just growing and growing and growing. I think I have like 30 some fund managers every quarter that I want to check up on to see what they've bought recently. So I'm not eager to add more to that. A lot of the investors that were highlighted in Richer, Wiser, Happier have very large funds, okay? Which means a lot of them can only really play in the large cap, in the mega large cap space, which isn't all that compelling to me. Again, I think there's a lot of opportunity, perhaps more opportunity in the small and micro cap space than there is in the large cap space, just because there's a greater opportunity for mispricings in that space, since great investors, a lot of them have had to move out just because it no longer moves the needle in the portfolio. Are they all included in your 13F videos? Probably a lot of them are. Yeah, I don't even know off the top of my head which, all of the investors that were highlighted in Richer, Wiser, Happier. But I know a lot of them are kind of more towards the tail end of their investment careers. So that's not as interesting to me. Fernando, Brad, your thoughts about Micron? It has declined the last weeks. Thanks from Mexico. Yeah, so Fernando. I spoke quite a bit about Micron in the beginning of this video. So, once the replay goes up, check that out. But I like Micron at $66, where it is currently. If I didn't own it, if it wasn't a big chunk of my portfolio, I'd be considering buying in at this price point. Again, not investment advice. Do your own work, but I like it. Johnny, inflation is transitory or not? Hyperinflation, stagflation. I'm becoming more and more worried Dr. Burry will be proven right again. Yeah, for me, the best defense against whatever unfolds is being invested in great businesses, right? Businesses that have pricing power. And one way to identify whether or not a business has pricing power, which I picked up from Terry Smith, is what are the gross margins, okay? If the gross margins for a business is 70%, it means that business is spending 30 cents on a product that it's selling for $1, okay? That is a very strong indication that a business has pricing power if it's able to make that kind of a margin. So to me, that's a more interesting place to focus in my investing than trying to predict what is going to unfold with inflation. I have no ability to do that. And so I don't really try, okay? I don't take in information that people are putting out on inflation. I'm probably missing a big wave, right? There's so many people who are interested in inflation and what's going to happen with it. There's a lot of YouTubers who make content about inflation. That content tends to do very well. But I think I would be selling a little piece of my soul if I was really doubling down around content on inflation, because it's not something I believe is something that investors are going to benefit from focusing on and trying to predict what's next related to inflation. So yeah, I just don't go there. So you're not going to see content out from me about that. I'm not saying you guys shouldn't pay attention to it. We each have to make decisions for ourselves in our own investments. What matters, right? What's going to make us sleep well at night in order to consider and to try to predict. It's just that's not on the menu for me. Do you avoid companies paying a dividend? That's a good question. If not, how do you handle withholding taxes from foreign companies? I find that I don't have many companies in my portfolio that pay dividends, and it's never a part of my investment thesis whether or not a company pays a dividend and how much. The companies I tend to focus on are companies that are going to have robust growth over decades, okay? And if a company is paying out a lot in dividends, it's very likely that they don't have those growth prospects, okay? Because if they had those growth prospects, there would be plenty of opportunities for them to deploy those earnings back into the business, okay? So they don't usually line up, the companies that I'm looking for and companies that pay out a lot in dividends. But I don't avoid them as a rule, okay? Are you a full member of VIC and think it would be worth pursuing? I am not a full member of VIC. I have to, like many of you, I have to wait. I think it's like 30 or 45 days in order to see kind of what's been published on VIC. I don't have a huge problem with that lag time. It's like the 13F filings. We have to wait to see what investors have done recently, with the exception of Charlie Munger, who seems very quick to release those 13Fs right after the quarter is over, at least for the last couple quarters. But the opportunities that I'm looking for, these very long-term plays, a month doesn't really matter in terms of having to wait to see, what's coming out on Value Investors Club. So, it doesn't faze me. It's not huge motivation for me to submit write-ups to VIC to try to become a full member. I think it'd be kind of cool to be a full member, but it's not something that I've prioritized. So take that for what it's worth. Thrifty Nifty Fund. Have you been able to identify a consistent theme in the fund managers you watch or create a checklist of sorts? Thanks for your teaching. A consistent theme. No, I wouldn't say I've It's kind of all over the map in terms of what these investors are looking for, whether they're looking for 20-cent dollar bills, whether they're looking to kind of play special situations, whether they're looking for companies that they can own for decades. A lot of these investors are Swiss Army knives, at least if you put them together, right? There's many blades in the Swiss Army knife that are represented by the investors that are on kind of my watch list for the 13F filings. And if a company, if a fund is too small to have 13F filings, just to see, what are they talking about on Twitter, or what are they writing about in their letters to shareholders? There's a lot of ways to get that information, what these investors are buying into, or at least intrigued by in terms of different investment opportunities. But there's no consistent theme. There's themes that, I tend to resonate more with, like, oh yeah, I'm going to pay more attention to that company versus that company because, the framework aligns with how I like to invest. But in terms of what these investors are looking for, margin of safety, I guess, is the consistent theme. They want to be buying something that's currently priced, what they think it's worth. All right. But what they think it's worth, it's all over the board in terms of how to really capture that. Checklist. Yeah, I do want to, I haven't, really spent the time to put down a checklist for myself. I've seen some great checklists. Some of you have sent me your own checklists. I think I've seen some of you that have gotten those from Phil Town, kind of used that as a baseline. It's a really good practice, I think, as an investor to have a checklist. Obviously, it's something Monish Pabrai does before he makes an investment. I'm sure Guy Spear has a checklist as well. It really helps, making sure you've thought everything through and you're not missing some glaring error in your investment thesis that could send your investment to zero, right? That's really, I think, the benefit of a checklist. Is there something I'm missing here? Or is there a way I'm deluding myself that will really cause me pain in the future around this particular investment? It kind of satisfies that don't lose money. Rule number one, is there something I'm missing? And that's what the checklist is great for. Aylin, would you be the smartest guy in the room that's against a cloning strategy say? Oh, sorry. What would the smartest guy in the room that's against a cloning strategy say? Ooh, that is a very compelling question. What would the smartest guy in the room that's against the cloning strategy say? Well, the smartest guy in the room would say, if you're cloning, you don't really understand the business. Okay, you're just copying someone else's idea. I would say, well, if you use cloning as just top of the funnel, right? You say, all right, I'm not going to look at a company unless a great investor already owns it. Okay, that's a starting point. That's not necessarily the strategy. It could be the strategy. It could work out, provided you've really thought through what a blind, shameless cloning approach would look like if it was thoughtfully designed. But that's something the smartest guy in the room might say. You might say, well, there's that lag time between when something has to be reported and when the activity actually happened, right? When the buy or sell actually happened in the fund manager's portfolio. But you can get around that by assuming that investor bought at the low price in the quarter, right? Again, there are strategies that the investors could have used to get into the position, like selling put options and being put the shares, rather than actually having bought, say, at the low price in the previous quarter, right? There's other ways to enter a position that we're not going to know just by looking at the 13F filings. It's possible that the investor buying a position that's shown up in the 13F filings is using it as a hedging strategy, right? It's not that they're actually bullish the company, but it's part of a greater strategy that we can't see because there are options involved. Michael Burry seems to do a lot of these hedged strategies where it would be difficult, and I think maybe counterproductive to try to clone Michael Burry just based on 13F filings. So, there's definitely pitfalls to just looking at a 13F, right? There's information missing from the bigger picture of what that investor may be trying to do there. So those are some challenges that must be overcome implementing a shameless cloning strategy. But in my opinion, they can all be overcome. But I love that question. Thank you, Aylin. Do you pay for value line? Last question from Brant. Technically I do, but I pay very little. So I have a library membership through the Fairfax County Library in Virginia, United States. And it was like $30 per year for this library membership. And you can be a non-resident to have this library membership. And the beauty about this membership is you can just log into your library account and through their online database online database, you can access Value Line and you can access Morningstar. I believe you can access both of those. So you're effectively getting a Value Line and Morningstar membership for $30 a year through this loophole from this library in Fairfax County, Virginia. And I've shared this with other people. They've checked in with their local library and realized, oh, I can actually get access to Value Line through my local library. Okay, so check that first. But yeah, that's an opportunity not that many people are aware of. That libraries often give you access to these fairly expensive databases if you were to go and subscribe directly with those. So that's a big tip. Fairfax County, Virginia. Yes, the library in Fairfax County, Virginia. Is Value Line actually valuable to you? That's a great question. I don't use it very much, okay? I think if one were inclined to pursue special situations like spin-offs and, some of these unusual special events, there's that special situation newsletter that you can get through Value Line that I think is put out monthly. So that could be valuable to you. One way I use Value Line is I use it to find insider ownership when I'm having a hard time getting it through SEC filings directly. I will go to Value Line and I'll type in the ticker in the top right. And I'll find out, okay, which industry is this company classified in according to Value Line. And then I'll go to the Value Line screener and I'll type in the industry, okay? So I kind of back into what the company has in insider ownership. I'll look up the industry and I'll look up the percent insider holdings. And then I can just scroll down, find the company in the screener, and it'll tell me what the insider ownership is. Now, you want to verify that because usually even a service like Value Line that's quite high quality, you want to double check that a figure like insider ownership is correct. So I usually just use it if I'm having a hard time finding insider ownership directly. And, I'm just trying to plug the insider ownership numbers into my magic formula spreadsheet to kind of figure out which 5 magic formula stocks I'm going to buy. So essentially, I'll figure out kind of a quick method of insider ownership. And then if that stock makes it all the way through using the other metrics that I filter for my magic formula portfolio, then I'll just want to verify that insider ownership figure is correct. But anyway, that's a long answer. I don't use Value Line very much. And I think Monish Pabrai used to use it a lot. Li Lu, I think, also used to use it to screen for low PE companies, just to see if there's any ideas worth looking at. Probably some other screens as well. But I don't think they use it as much anymore. At least Monish Pabrai seems to be moving away from screens as a way to find opportunities, and relies more on, people sending him ideas directly, or, learning about new ideas from SumZero and Value Investors Club. So yeah. Oh, that conversation really got you guys fired up in the chat. That's great. I'm gonna have to wrap this up soon, but I'll take a couple more. One of the reasons I'm gonna have to wrap it up soon is my voice is starting to go. That's always a good measure of when I'm just about done. Brandt, okay, that's amazing. I saw a Lilu interview where he said he almost strictly uses Value Line. Yeah, Lilu interviews are amazing. They don't happen very often, maybe every 3 or 4 years probably with Lilu. But yeah, I'd love to ask Lilu that question. How does he use Value Line? If I can ever get Lilu on, like do an interview with Lilu, I'm going to put that in the back of my mind to ask him about that. John, for what it's worth, I have Value Line and love it. Awesome. Thanks for chiming in there, John. C-Chap, how well do you truly need to understand the company if you are just cloning? Do you find yourself naturally leaning towards knowing the company less than you would if it was your own idea? So yeah, this is something Monish Pabrai talks about, in that you don't really know a business until after you own it, okay? You might think you know a lot about it, but once you own it, you've got skin in the game, okay? And there's that deeper drive to really pay attention to what's happening with the business. In order to get in, I would say it's going to be really hard to really understand the business before you get in, which is why there's probably some wisdom to just taking the teaser position, right? To kind of inching into a position. And the more you learn about it, I think this is Li Lu's approach as well. Even if the price runs up, right? The more you learn about it, the better you're able to estimate the intrinsic value of the business and what it's actually worth. And if you nailed it, right? You picked just a great business. Even though the price seems like it's running up, for investors who don't understand it well, it might seem like the price is running away from you. If you can really understand it and value it, some of these great businesses, I mean, they can compound intrinsic value very impressively. Okay, so it's kind of a different framework, a deeper framework for that price to value situation, and not anchoring to your initial buy price, but simply looking at, based on how I understand the business, where is the margin of safety here? Where is that delta between price and value? Let's see. I'll take just a couple more. I keep saying that. Maybe we're going to go all day here, guys. We'll see what happens. This is fun. I mean, what am I going to do after this? Drink more coffee and read email? I'll probably do some work too, right? That's on the table, but this is more fun than that. Brandt, Lilu says he reads all of their newsletters. Okay. What goes into their newsletters, Brandt, if you wouldn't mind sharing? I don't know that I've ever read a Value Line newsletter. Is it a monthly thing? What are the sections? Is it like reading the Financial Times? I'm curious how that's structured from Value Line. ADI, all right, we got Jason. We got Jason in the house. Value Line is my training wheels. It helps. Okay, cool. Another shout out for Value Line. Seems like people are getting value from Value Line. Imagine that. Brandt, not everyone is just cloning. We also want to take a look at where we are putting our money. Yeah, I think from a psychological, from an emotional perspective, just blind cloning is going to be very challenging for people to reap the rewards of cloning. if you don't have more than that to really support your investment process, okay? You need to find ways to not be swayed by what's happening with the price of the company, okay? If the price is going to whip around, right, like a mechanical bull, right? You get on this thing. The analogy is you getting on this mechanical bull as the analogy for buying into an investment. If you're going to be whipped around by the price, it's not going to work out, okay? And so if shameless cloning, if it's not a solid enough foundation for you to really mount yourself on this bull, you're going to need to go deeper. You're going to need to have more of a solid anchoring to, what's moving the needle for this business. And often that's understanding the business, right? The more you understand the business, I just put a tweet about this morning, okay? How Warren Buffett, back in 2008, he owned a farm, right? And everything was crashing, right? And there's fear everywhere, fear in the markets. Now, Warren Buffett didn't think twice about selling his land, right? There was no question. He's not going to sell this farm because the price is dropping, right? The supposed value on paper of that farm is dropping, okay? Because he understands the value of the land, right? It's not tied to what the price is. It's tied to what that land can generate, what that land can produce over decades, over the life of that land. So that's really the way to think about these businesses. Not everyone is just cloning. Yes, that's what I just talked about. Paul, do you think the world is heading into a recession, or do you think there's an impending market crash? Seems like we're in 1999 with the amount of speculation going on. So I get the appeal of wanting an answer to this. Okay, I really do. If we had an answer to this, that's a very powerful position to be in the portfolio, right? We can decide, we can time it, right? We can time when to pull everything out, when to plow everything back in, and just make out like a bandit, okay? It sounds great on paper to be able to do this. From my perspective, it's unknowable, okay? And I think trying to know it is a waste of time. So I don't spend any time there. I think if you're making decisions trying to predict when a recession is going to happen, you're probably going to do more harm than good to your investment portfolio in the long run. But a lot of people do it, okay? And a lot of people do harm to their portfolios by trying to do it. So I just stay away from it. Personally, I don't think, there's a lot of we hear about the speculation, okay? We hear about the speculation in crypto, in NFTs, in these meme stocks, right? These are the things that really come up in the news, right? It's what people want to talk about. But I don't think there's a ton of speculation going on in the market as a whole, even in the US market as a whole. Now, a lot of that is, where are interest rates going to go, right? If interest rates go up from here, that's going to drive valuations down. But that's kind of unknowable as well. It's probably reasonable to assume interest rates are going to rise at least over the next decade or so from where they are now, which is going to put valuation pressure, downward pressure on valuations. But, over the next 30, 40 years, if you have, that long runway in your portfolio, it probably doesn't matter in the grand scheme of things very much. I don't know that I would, in fact, I wouldn't be using what I think is going to happen with interest rates over the next 10 years to guide how I'm investing over the next couple of years. It doesn't matter. Okay. So I don't know, and I don't think it matters. But, your investment framework needs to be designed in such a way that it doesn't matter. You've got to have that long enough horizon. You've got to be focused on owning quality businesses over time. It's possible that you guys are embarking on strategies, or you have a framework where it might matter. Okay, so depending on how short-term your time horizon is, it may be worth considering those things. From my perspective, it's impossible to predict those things. So that's why I don't engage in those shorter-term frameworks. Okay, it all kind of ties back in. Have you taken a look at Nautilus? I'm into working out and have seen their stock plummet, and the financials don't look terrible to me. So I bought Nautilus in my Magic Formula portfolio. It looks crazy cheap, at least from an acquirer's multiple standpoint. I think when I bought it, it had an acquirer's multiple of like 2 or something insane. Let's see where it is now. It's just been going down, seems like, since then. So 1.8 acquirer's multiple. Okay, and again, acquirer's multiple, enterprise value divided by the last year of earnings. Okay, 2, which is insane. I haven't done any deep work on Nautilus, but it seems like it's worth digging into. Nautilus, it seems very interesting, at least based on how cheap it is. So yeah, I'm all for taking a look at that. And let me know when I do this kind of 5 minutes ticker time type format. It'd be fun to take a look at Nautilus and get a little bit more of a handle on what's happening there. So poke me on that if any of you guys are participating in that. All right, last one. My voice will completely go dark in probably just a minute here. It's starting to go. C-Chap. Yes, but I wonder if behavior changes when you follow someone you trust. Does it make you more confident than it should? Yeah, that's one of the things to consider when you're shamelessly cloning. How much do I like this person? How much do I trust this person? Am I overweighting their positions, their buys because I like them, because I have sort of a guru halo around them when I look at them. It's important to identify as many of these biases as we can, to remain as rational as possible when formulating a shameless cloner approach. So yeah, all of that I think should be considered and should be parsed out as much as possible from constructing a rational framework. So I'll just leave it. I'll leave it there, guys. Thank you again for everyone's participation. This is so much fun. I'm going to put my voice on ice for now, and I will see you all in the next one. Oh, Cleverson. I got a super chat right at the end there. No question. Just you provide a lot of value to us. Thanks. Thank you, Cleverson. Much appreciated with the super chat. All right. Love you guys. I will see you all in the next one. Be well. Bye-bye.